of the weakening US dollar on the Singapore economy. Singapore is a four-sector open economy with limited resources. With the US and Europe as major trading partners, she would be largely vulnerable to external shocks. Furthermore, with a high GDP export ratio, these external shocks would be further amplified. Printing of more US dollars has resulted in the weakening of US dollars, affecting Singapore's economy. This flood of hot money unleashed by the United States' latest round of monetary easing could inflate the Singapore property bubble. This bubble may burst, harming the economy when the hot money suddenly leaves. It has also affected Singapore's exchange rate, strengthening the Singapore dollar. A strong Singapore dollar, coupled with a relatively low inflation rate vis-a-vis other countries, would boost business confidence, encouraging investments. This may in turn lead to an investment boom. Therefore, the flood of hot money into Singapore has both desirable as well as harmful effects on the economy. So, what are the various internal and external impacts of a weakening US dollar on the Singapore economy? Internally, it affects employment, inflation, and economic growth. Externally, it affects BOP and exchange rate. One main reason for this increase in employment in Singapore is that with a weaker US currency, the cost of importing goods from the US would be considerably lower. This would lead to an influx of funds, which would cause interest rates to fall. Trigger a rise in both local investments as well as domestic consumption, resulting in a rise in domestic demand. This rise in domestic demand would increase the productive capacity of the country due to the increased consumption of goods, which would also lead to a sustained increase in wages, prompting an employment boost. Therefore, with a weakening US currency, the employment rate in Singapore would most likely increase. Recent surge in investments include private investment in new physical capital and in R&D. This increases the capacity of the economy to grow as productivity improvements were made to extend potential output. With these improvements, Singapore's economic growth would increase. Productivity improvements drive prices downwards, stimulating demand and AD. Investors are profit-driven and hence would embark on new projects and enterprises, stimulating further productivity growth. As labor productivity rises, wages rise as well. Higher wages leads to greater consumption. Thus, through the multiplier and accelerator, it generates larger output and higher investment, stimulating advancements in productivity. In the long run, as businesses experience higher productivity growth, they would enhance their competitiveness, enabling them to gain greater market share. This encourages further investments and productivity growth. The increase in housing prices has resulted in inflation in Singapore, which is gradually forming a property bubble. Due to the latest round of quantitative easing unleashed by the United States, commodity prices has also increased when oil prices around the world increase. The increase in oil prices will result in a higher standard of living in Singapore. Singaporeans would then experience an increase in prices of necessities in Singapore. Exchange rates currently stands at 1.31. The MAS have appreciated the Singapore dollar due to the weakening of the US dollar in order to combat inflation. The weakening of the US dollar contributes to a less favorable BOP position. This is due to a more current account and capital account outflow than inflow than before. The MAS have appreciated the Singapore dollar due to the weakening of the US dollar. Countries that have trading relationships with Singapore would be affected and reduce trade with Singapore. This also results in a lesser current account inflow, which can further make Singapore's BOP position less favorable.